Hello everyone, I'm Professor Capko, and today I'm going to show you how to easily calculate return on equity, otherwise known as ROE. And I'm going to have an example problem here that we're going to work through, and by the time we're done, if you watch all the way to the end, you're going to say, this is so easy. So let's work together on it. In this one, we've got in the beginning of the year, net assets of the company were $550,000. The only transactions affecting shareholders' equity during the year were net income of $43,000 and dividends of $20,000. Let's look at how to calculate the company's return on equity for this year. The formula we're going to use is return on equity is equal to net income divided by the average shareholders' equity. Now, shareholders' equity sometimes is called owner's equity, stockholders' equity. Sometimes it might just be called equity, but it's all essentially the same thing. So we're going to figure out how to calculate this. First of all, we know the net income, right? It's given to us right here. That's $43,000. But we need to figure out the average shareholders' equity. All that we are given are the beginning of the year net assets. Well, if we don't know what net assets are, let's take a look at that. Net assets are equal to assets minus liabilities. If you're not sure what all these things are, assets, liabilities, equity, I've got some beginning videos up here that I've linked, and you can take a look at that and get a better idea of these balance sheet items. All right, now that gives us net assets. We now know what net assets means, but we still need to have shareholder equity. Well, we know that the accounting equation says assets equal to liabilities plus owner's equity, right? So owner's equity is what we're looking for, or shareholder equity. So liabilities plus owner's equities is equal to assets. So if we were to subtract algebraically liabilities from both sides, we wind up with assets minus liabilities equal to owner's equity. So in other words, net assets is equal to shareholders' equity. So in this case, our beginning net assets are $550,000. So beginning shareholders' equity, because the net assets are that, our beginning shareholders' equity is equal to $550,000. That's the beginning one. And we know that is because net assets equals shareholders' equity, and we are given net assets. So we know the beginning shareholder equity, but this is asking for the average shareholder equity. Average shareholder equity would be the beginning shareholder equity plus the ending shareholder equity divided by 2. And that would give us our average shareholder equity. We know the beginning shareholder equity in this case is $550,000. We're given that. We need to know what the ending shareholder equity is, and once we have that, we're going to divide it by 2. How do we figure out the ending shareholder equity? Well, we are told that the only transactions affecting shareholders' equity during the year were net income and dividends. And if you want to know how to calculate ending shareholder equity, I have a video right up here that shows you how to do that. But we're going to do it together here anyway. So we have a net income of $43,000, and we're going to subtract from that our dividends, and that's for the year of $20,000. So that leaves us with $23,000 as the increase. That's an increase in shareholder equity. And we know it's an increase because it's a positive number. So we're going to take that and we're going to add that to the beginning shareholder equity, which was $550,000. And that gives us an ending shareholders equity of $573,000. $573,000 is our ending shareholder equity. We can take that number and place it back into our calculation up here to figure out the average shareholders equity, $573,000. Let's use our calculator for this just to be sure we're correct. And we're going to take 550,000 and we're going to add to that 573,000 and we're going to divide that by 2. And that gives us an average shareholder equity of $561,500. We can now take that number and place it back into our original equation where the return on equity is the net income divided by the average shareholder equity. Let's do that and see where we're at. So our net income we know is $43,000. And we calculated our average shareholder equity to be $561,500. And we can go ahead and divide that. So let's put that into the calculator. We have 43,000 and we're going to divide it by 561,500. And that gives us an average shareholder, that gives us a return on equity of 0.07658. And this is usually reflected in a percentage. So if we're going to change this decimal to a percentage, mind you, these are both dollar figures here. So we're going to change this into we're going to change the decimal from a decimal to a percentage. And if you don't remember how to do that, I've got a video linked up here reminding you how to do that. Basically, we're going to move the decimal place over twice. And so our return on equity is 7 point, and then the 6 we're going to round because it's a 6 followed by a 5. This becomes a 7. 7.7% is our return on equity. If you find this content helpful, please smash the like button and subscribe to keep your grade alive. Thank you.